Okay, last up is BridgeCare Finance. Audra Jung, welcome to the stage.
The toughest job most adults will do in their lifetime, the one they will love the most, does not pay a cent. In fact, it will cost them money. Actually, lots of money. It's called parenthood. And as if the first years weren't tough enough, we're living in a moment where the cost of childcare has outpaced college tuition. This leaves most parents wildly unprepared, and it means 60% of them are actually making career decisions based on the cost of care. 1 in 3 of even the smartest and most creditworthy are using high-interest credit cards just to make ends meet. We can do better, much better, and we can make money doing it. In fact, a lot of money. My name's Audra Jung. I'm the co-founder of BridgeCare Finance, the first consumer lending platform for childcare. We allow parents to pay for childcare over a longer period of time, just like they do with other major and critically important expenses. This means they can access quality care, they can avoid credit card use, and they can follow a continuous career path. Meet Ashley. She just found a childcare center she loves, and the monthly tuition is more than her mortgage. Luckily, the Bright Horizon Center she's fallen in love with offers a financing option through BridgeCare. She found out about it from the childcare center director, and she found a brochure in her enrollment packet. So she visited the website. She found a payment plan that makes the most sense for her family. So she set up an account. She started working her way through the short application, including her childcare needs, personal information, her employment and income, and finally authorizing a credit check. Pre-approval took just seconds, and voila, she's been pre-approved. And now she can breathe. Because her childcare bill just went from $1,500 a month to $900. BridgeCare will manage the full tuition payment directly to her childcare provider, and she'll follow her payment plan. She also loves the fact that when her BridgeCare line of credit is paid off, she can seamlessly transition to college savings without missing a beat. The convenience and added monthly cash flow is well worth the interest and fees she'll pay to be part of BridgeCare. And cash flow for Ashley is everything right now. She's in her medical residency. Her cash flow is limited to her current income of just $50,000 a year. Even when combined with her husband's income, their household earnings total $110,000. Her salary is almost not enough to justify her returning to work at all. Almost everything she'll bring in each month will go directly to childcare expenses, and yet she spent 10 years building her career, and she is on a path to becoming chief physician one day. So for Ashley's family, BridgeCare makes all the difference. And exactly how many Ashleys are out there? A lot. Right now, there's 1.3 million mothers of children under age 5 who right now hold professional and advanced degrees. These are the folks who have modest earnings now, but huge income potential. These are our early adopters. These are the folks who have invested time and money in building a career that they care about. And it's the reason why some of them have already paid $100 just to be on BridgeCare's waiting list. Of course, our total opportunity is much bigger. There's 3.3 million children in the United States that live in households where the income is between $100,000 and $150,000. 66% of those children are already enrolled in a BridgeCare eligible center. Meaning, if we capture 20% of that market, we're talking about a $4.6 billion opportunity. So let me tell you exactly how it is BridgeCare makes money. Because we're a finance company, I want to go into some of the nitty-gritty on this, but I need to remind you, this is not a solicitation for funds, and it's not meant to suggest ROI of any kind. However, we start with our net revenue per customer of over $10,000. We make this revenue in 3 ways: through through interest, through fees, and through a discount we negotiate with our partner providers. Our total marginal cost on net revenue totals less than $1,000. This encompasses our customer acquisition costs, our loan loss reserve on a per customer basis, and our loan servicing fees. Side by side, it's clear to see the profitability of each and every BridgeCare loan, far exceeding the margins you'll see in other fintech products. The reason we're able to do this is we acquire our customers through smart partnerships, and we build a long, sustainable relationship with those customers. The next question can be, how fast and how much can BridgeCare grow? We are set for rapid growth. And because we break even in year 2, we can self-sustain growth by year 3, meaning in a strong economy, BridgeCare shoots the moon. And in a downturn, we stay healthy. Now, we are the only consumer lending platform for childcare, and parents do have some other options. You already know 1 in 3 are using credit cards. Other folks might consider a personal loan or a home equity line of credit. The problem is these are not built for childcare, so they don't work quite right. They can be more expensive, and ultimately what they're guaranteed to do is bring a whole lot of headache. What BridgeCare does is brings a convenient solution with set and forget plans to busy parents. I'm excited to announce today that our team is already growing. We've successfully recruited a lead developer, and we've added compliance and credit expertise to our core team, rounding out the powerhouse that we need to bring this product to market. This is a look at the next 6 months for BridgeCare, starting with our major strategic partnership. We have a partnership with Bright Horizons, the largest leading provider of childcare in the United States. They've agreed to lead our pilot program in Washington State. In this state alone, they have 24 childcare centers with about 150 children at each of those, giving us, if you do the math quickly, instant access to 3,600 children from day 1. In the meantime, we're building out our paid family wait list, and we're growing our additional network of providers and parents. This is a look at long-term where BridgeCare is headed, including multi-state expansion and rapid growth. From day 1, we have built BridgeCare to be externally fundable, to grow quickly, and to be well poised for an early acquisition. In fact, these are examples of acquisitions from the last year that have similarities to BridgeCare. In the childcare industry, it is clear that the limit to growth are parents' ability to keep up with rising costs. So, for childcare industry leaders, particularly those who are publicly held, like Bright Horizons, a financing service acquisition could be a major strategic opportunity. In fintech and banking, it's clear that the path to growth is all about specialty products with a clear target market, exactly what BridgeCare delivers. BridgeCare is the much needed innovation in the childcare space. With our powerhouse team, diverse backgrounds, and strong partnerships, we will be the next big thing in specialty finance. Thank you.
Hi, my name's Alan Neiman. I led the diligence round for BridgeCare Finance with my teammates Steve and Taylor. Steve's here. Steve, you just met him. There he is back there, and Taylor could not be here today. So, we dug into BridgeCare Finance with the team and covered a number of areas, a few I wanted to talk to about. So, obviously, this is a finance product that they're offering here, a tech-enabled finance product. And so, there are a number of legal and regulatory requirements for this type of product. And we talked about what those were, and we verified that they have sort of met these requirements. For example, in order to make a loan to somebody as a business, like if I wanted to just loan you some money, that's okay. But if I want to make a business of loaning somebody money, I have to have a license for that. I have to have a consumer lending license. So this is not a difficult thing to get, but it's one of the hurdles that has to happen. These hurdles are, in this case, is a state by state, correct? A hurdle that has to be done. So they have the license for Washington, are pursuing licenses in California and a number of other states all at the same time. Most of those states are pretty easy. Some are more difficult, like New York, but those are coming along. Other legal hurdles are around, for example, the promissory note, the actual loan paper that has to be created. So there's a legal team that's advising BridgeCare that is creating that paperwork, and that paperwork also is completed. So there's a number of things like that we went through, and BridgeCare has those completed, and it was great to see that. Another area we looked at were the financial assumptions. There are a number of financial assumptions baked into here, and Audra talked about them. One of the ones that we talked about, both as an investor group as well as part of the due diligence with the team, had to do with exactly what that cohort of possible customers look like and how many kids they would have, and to really try to get very discreet about what that customer would look like. Is it a customer? Is it a single parent? Is it a two-parent household? Do they have one child, two children? Which ones are in childcare? How long are they in childcare for? When would BridgeCare? When does it make most sense for that family to take advantage of BridgeCare? So we went through a number of those questions, worked out those model items, and feel pretty good about most of it. Do have a follow-up question later I want to ask about that, but that's part of it. And then the other point here I want to talk about is that the product, if you will, that they are offering is cash, right? So they have to not only raise equity in order to fund their ongoing operations and their growth, but they also need to raise debt capital. So what we did was we talked about those, and I went out to some other folks in the finance industry that I know and talked about debt capital, and through the feedback that the team gave me around their ability to raise that debt capital, and feedback that I got from people that I know in the industry about other investors, both institutional and private, who would be willing, for example, to invest debt capital and earn, say, 8% or 7% in today's market. They were pretty happy about that. And BridgeCare has raised and banked $75,000 earmarked already for debt capital. So that was good to hear as well. So as far as questions on the team side of things, so we have the co-founders up here. That's fantastic. We saw a slide about other members of the team. One brand new thing I learned was some of the stuff that's happening here happened overnight, I guess. But had questions about the team and about the fact that during diligence there was, at the time, nobody on the team that was in a technical role, nobody on the team that's really in a credit role. So if you guys could maybe tell us a little bit about what you're doing there, that'd be great.
Sure, yeah, I'll take that one. I'm Jamie. Thank you all for being here. So our team, when we came into Seattle Angel Conference, was Audra and I, and we knew that we needed to recruit both a technical person as well as a credit person, to the point of this question. Since the start of Seattle Angel Conference, we have been aggressively seeking those people, but also having an interim solution in the meantime, because we want to recruit the right people for these positions that will stay with us for the long haul. So we're happy to say that we have recruited successfully our CTO, our technical officer, who will be coming to us full on in July, but is in the meantime developing our product. You can see our demo in the back. He comes from a mortgage origination software in the fintech space and has raised their Series A. They've created successful partnerships. We're very excited to have him on board. And then in the meantime, we're looking for the credit officer still, but we have filled that role with Predictive Analytics, which is a company that is like an outsourced CFO, but for credit. So they hold both the expertise of compliance and credit. They have both over 20 years of experience in Wells Fargo, Citibank, Barclays, and Bank of America, and bring a lot to the team to round out everything that we've been looking for while we still search for that candidate.
Great. So I'm going to go over it. We're short on time.
Yeah,
so
sorry.
I'm going to come down to the last question of customer
Okay.
attraction. So in case you guys, it was unclear, BridgeCare is really pre-product. So you're getting ready to launch. There is no product per se right now, and there are no customers per se right now. So you've talked to people, and they've said, I would use this. But can you talk a bit about how you would translate those people from saying I would use this into actual customers?
Okay, well, speaking of things happening overnight, yes. This is a big question for us too, right? Like, people love this idea. The question is, are they going to pay for it? So one thing that we've done since being part of this Seattle Angel
All right. Thank you so much.
We have 5 paid customers.
That's awesome. Way to sneak it in. Let's talk about that.
So we have some great sponsors that are providing some support for the entrepreneurs. We want to get more entrepreneurs to be successful enough to be angel investors so that we amplify the cycle.